Should we buy or sell the emerging markets? So first off, read this disclaimer carefully. We start here with the charts, weekly data points, and this is definitively big picture. So we can see that since inception, this ETF has been way higher. We are at a very low level. So for the most time this has been public, we have been higher. So this is definitively a bear market. If we measure the fall from this all-time high to the current level, we are talking about a minus 63% bear market. That is very substantial for sure. If we look at this, let me draw it in. We do have something that potentially could be, yeah, it's a bit of a inverse head and shoulder-ish pattern in development. Does it mean that the low is in? No, not necessarily, but this is an opportunity for the low to form. Looking at the daily data points, we see something rather interesting. Ever since this, all-time high, we have really struggled with the 200 daily moving average. It's a huge deal and very much technical indicator. And let me draw it in. So this is obviously a super important technical level. The bulls are so far able to use it as support. So technically speaking, there's an interesting event. Let's quickly look here at these other technical indicators. Weekly data points. RSI is in the mid zone. PPO is fairly low. There's nothing like really dangerous for the bulls here. It's constructive that RSI is establishing a higher level, so we are not overbought, and we have been able to clear prior resistance levels. On the daily data points, we do see that RSI recently touched the upper end of the bullish momentum zone. We do see that the last time back here in the 7th of June 2022, when we touched the higher region of RSI, we did see a pullback. So the bulls have pushed it a bit, but what is very constructive to see is that even though we have seen some elevated levels of RSI on the dailies, the 200 daily moving average is able to hold on to the price. So the context here is pretty interesting. So let's write 200 DMA support. Yeah, that's the key event, I think. I will give the bulls, I think I give the bulls a 4 here. I would have given them a bit more if we saw more of a bounce, but currently the bulls are sort of goofing out at this support level without being able to really trigger a rally. But there's something constructive happening here. Next on the list is the seasonality analysis. The other seasonality tool that I like to use is currently having technical issues. Okay, so this seasonality forecaster shows us the developments over the last 5 years on average in green and 7 years in blue. We do see that into 6th of January, we usually see a bit of weakness from this ETF, but then some strength into later-ish January, around 18-ish of January, and then we see some weakness into the end of January. Here is another seasonality tool that I like to use. So over the last 20 years, we do see that January only closes higher 50% of the time. This one has not been trading for 20 years, but based on all the data, basically, it is literally 50-50. I will give the bears a 2 here on the seasonality. It was overall more bearish than bullish, but there was some bullish periods within the current month, so it's a bit messy. Let's compare the EMQQ Emerging Markets Internet and Ecommerce ETF with the Global Consumer Discretionary ETF. A very substantial portion of the consumer discretionary ETF is related to internet and e-commerce. Yeah, if we go to performance, looking at the last year, minus 26.6% for EMQQ, minus 28% for RXI. So yeah, been some slight outperformance from emerging markets. Beta is a bit lower, 93 versus 105. Looking at the yield, 0.64% for RXI and 0.22% for the emerging markets. So basically, very little yield. 134 holdings versus 142. So Tencent and Alibaba on top in emerging markets, Amazon and Tesla in the global ETF. And you can see here that Alibaba then drops down to sixth place in the global ETF. But yeah, we do see some companies that are in both of these ETFs. Here you can see the asset breakdown and sector breakdown. Yeah, looking at these fundamentals, they were not really that good for the EMQQ. Not terrible either, but there wasn't like a strong fundamental case for this ETF. Let's look at relative performance. Looking at the weekly data point, there is a 13% correlation with the S&P 500. That is very little. 58% with RXI and minus 61% with the 10-year yield. Daily data points, 49% with S&P 500, 62% with RXI, and minus 79% here with the 10-year yield. So what happens with the 10-year yield, the TNX, is going to have a pretty big effect on the emerging markets. And here is the chart for the TNX. We have seen some pullback now, but over the last 2 weeks, we have seen a significant rally. The 10-year yield has been on a very sharp rise. Throughout, there's been some pullbacks, but overall the trend is pretty clear, it's upward. If we look a bit here at the seasonality for the TNX, it's actually rather bearish into the 14th of February. Given that there is a negative correlation with EMQQ and the TNX, that could be bullish for emerging markets. So now let's look a bit here at relative performance and do some side-by-side comparison. Well, let's do it like this, and we got TNX, 10-year Treasury note yield. Okay, looking at weekly data points, we do see that emerging markets are extremely low versus the 10-year yield. We usually do not see it underperform the 10-year yield like this. So this is an anomaly. Anomalies, they can definitively continue. But when you have an anomaly, the probability of sort of like the norm coming back is pretty high. But when it is coming back, that's the big question. So you gotta be a bit careful with anomalies, but the fact is, looking at this chart, this relationship, this is very low for EMQQ. Yeah, let's look here at the daily data points. We have some kind of bottoming formation, but not clean yet. So I don't want to draw anything in at this point. It's a bit messy. The seasonality, though, is pretty darn bullish here for the EMQQ, meaning that leading all the way into May, the emerging markets ETF has a tendency to outperform the 10-year yield index. On relative performance, I gave 6 to the bulls. We end up with 1.3 here in favor of the bulls. The number one entry signal and also the stop loss here is 200 daily moving average support. So let's just EMQQ like this. So if one were to trade the EMQQ based on this indicator, so if we lose these lows back here, that would be a bad thing. So let's say that if you were to turn bullish, one would have to operate with 2.5% stop loss. It's a bit of an aggressive stop loss. You could even have a 2% stop loss. But the thing is that if there are bulls out there, we definitively expect them to take advantage of this opportunity. If this were to go lower and stop out the position, fact is there weren't enough bulls. Bullish trades, they need bulls to work out. So it's a good rule to have. If you are bullish, then you definitively have the expectation that price will go up. If the opposite happens, that's a clear signal that there's more sellers than buyers, and that can go really badly for a bullish position. Another thing here, if you look at this green indicator, that's the 50 daily moving average. It's moving upwards. So you do have on the horizon the possibility of a golden cross. So we do have some time left. Let's look at some of the stocks under the hood of the EMQQ. Tencent is on the top of the list. Tencent Holdings, like this. Yeah, let's look. Yeah, if you see here that there is an over-the-counter edition, but let's look at the one here in Hong Kong, I think. We have seen a sharp rally here. We do have the green 50 weekly moving average that could offer resistance. There's also, interestingly, this inverse head and shoulders pattern, like here. That's interesting. And looking at the daily data points, we have broken out above the 200 daily moving average in this case. That's increases the bullishness. Seasonality is not too shabby either. Looking here at price book, price to sales. So price book here, you can see that looking further back, we are relatively low. Also price to sales and price earnings. So that's so let's look at the analyst price targets to see where the forecasts are at. So as far as forecasts goes, you have 54 analysts with a 1-year price target. The minimum target is 33% below us. Average is 18% above us. The highest is 80% above us. So that's pretty bullish. So Tencent is interesting. We do have this inverse head and shoulders pattern, but some of the big gains they have already been made, so it's a bit later to the party, but it's not like super late. But ideally, it's best to get in to have an entry where you can have a very clean stop loss, because if you were to turn like bullish on Tencent now, the key indicator to trade would be the red 200 daily moving average. But if you were to buy here and have the stop loss below the 200 a day, then from the get-go you are at a 5% stop loss. So it starts to get a bit problematic when you miss some of these initial moves. And with that 5% stop loss, that could finance, even potentially 5 very tight stop loss trades when you have a clean test of an indicator, which over time will push your odds in your favor. Okay, so here is Alibaba, traded on the NYSE, which makes it much easier to trade. Getting into Tencent with the over-the-counter edition, it works, but the liquidity here in Baba is very good. Baba is very low indeed. So from a pure looking at the chart and looking at where we are now, you could start to make the case that it looks undervalued. Technically, it's a bit messy. We are below a very key resistance level here with the 200 daily moving average in red. Seasonality here is a bit bearish, unfortunately. Let's look here at some of the forecasts and also the price earnings and the like. So price book here in blue is pretty low historically, so there's value. Price to sales also pretty low. Not entirely sure how accurate this price earnings is. A very sharp increase there. Let's look here at the price targets among the analysts. 48 analysts with a 1-year price target. Minus 18% is what the biggest pessimist think is in store. Average is 52% upside price target. and highest is 153% above us. So we have looked at the EMQQ and some of the top holdings. Overall, it's an interesting setup, but it's very make or break when it comes to the 200 daily moving average.